Happy Friday, and welcome back to TradeFT Daily Financial News. We're here with the week's wrap-up and today's key market insights, helping you close out strong. Be sure to subscribe and explore TradeFT.com for more news, resources, and analysis to keep you on top of your game. And in US markets, Wall Street ended lower yesterday after Federal Reserve Chair Jerome Powell poured cold water on hopes for a December rate cut. With inflation above the 2% target and a strong job market, Powell signaled caution. As a result, major indexes slipped, Dow Jones down 207 points, S&P 500 losing 0.6%, and Nasdaq dropping 0.64%. Investors are now pricing a 62% chance of a rate cut in December, down from 82% just a day ago. Stay tuned. These shifts are sure to drive market sentiment in the weeks ahead. And in Forex news, the US dollar is flexing its muscles, hitting a one-year high. Hawkish signals from the Fed have left short-term Treasury yields elevated and traders scaling back rate cut bets. The euro, meanwhile, is languishing at $1.0540, its lowest in a year, with expectations of more aggressive policy easing in Europe. Over in Asia, the Japanese yen continued its decline, trading at 156.57 per dollar, raising questions about potential intervention by Japanese authorities. The currency landscape is certainly buzzing. Shifting gears to tech and consumer sectors, Tesla dropped 5.8% after reports that the Trump administration might eliminate the $7,500 EV tax credit. Meanwhile, Disney shares soared 6% on better-than-expected earnings and optimistic future guidance. Consumer discretionary stocks weren't as fortunate, with the sector down 1.5%, and Rivian shares plummeting 14.3% on the same tax credit news. Volatility remains the name of the game in these markets. And over in Asia, Chinese retail sales outperformed expectations, rising 4.8% in October. But other economic indicators missed the mark, keeping markets mixed. Japan's Nikkei saw a 0.7% rise, driven by a weaker yen boosting exporters, while broader Asia-Pacific markets remained down 4.3% for the week. It's a reminder that global markets are still navigating uneven recoveries. Finally, in commodities, gold is headed for its worst week in over 3 years, trading at $2,569 per ounce, down more than 4% this week. Oil isn't faring much better. Brent crude fell to $71.91 per barrel as demand concerns from China and rising US inventories weigh on prices. Analysts predict that without a strong catalyst, recovery in these markets might take a while. That's a wrap for the week from TradeFT Daily Financial News. If you enjoyed today's content, don't forget to like, subscribe, and share to keep others informed. Have a fantastic weekend, and we'll see you back here on Monday.